Welcome to TalkTickers. Today we're diving deep into Luminar's first quarter 2025 business update call.
Yeah, and this one, well, it wasn't just about the numbers, was it? Some pretty big non-financial news dropped.
Exactly. So let's unpack all of it. What do people following this space really need to know?
Okay, let's start with the top line. Q1 revenue was $18.9 million.
Which sounds like a dip.
It is, yeah. 10% down year over year, 16% sequentially. But, and this is important, it was right in line with our guidance. No surprises there on the revenue front.
Okay, in line. And profitability or lack thereof.
Right. So a gross loss. GAAP was $8 million. Non-GAAP was $6.4 million. Again, pretty much what they expected.
So expected losses. Why the loss, even with nearly $19 million in revenue? What's going on there?
It really comes down to the serious production ramp up, especially for Volvo. They shipped nearly 6,000 sensors in Q1.
Wow, 6,000. That's a big jump.
Yeah, 50% up from Q4. But the thing is, at this point, the cost to build each sensor is still higher than what they sell it for. It's kind of like an investment phase.
Okay, classic scaling challenge. Paying up front to build volume, hoping costs come down later.
Exactly. The idea is as they make more and get more efficient, those unit economics flip positive. That's the key thing to watch. How fast can they improve those costs?
Makes sense. Investing now for profit later.
But
what about managing the money they do have? Any good news on expenses?
Definitely. On the OpEx side, non-GAAP operating expenses are down significantly, about $115 million on an annualized basis compared to last year.
That's huge from the restructuring.
Precisely. Those actions they took seem to be really working. And similarly, stock-based compensation, that's down almost $100 million annualized.
Okay, so real savings there. How's their cash looking?
They ended Q1 with $188 million in cash and liquidity. And free cash flow, while still negative, improved quite a bit, negative $44 million.
Negative 44, is that better than before?
Yeah, it's actually their lowest quarterly cash burn since way back in 2022. So the cost cutting is definitely helping stem the outflow.
Good progress on managing the burn then. So despite the Q1 dip and the losses, are they sticking to their full year plan?
They are. Still guiding for 10% to 20% revenue growth for the full year 2025.
Interesting. Holding firm.
And they actually improved their year-end OpEx outlook. They're now targeting the low $30 million range per quarter, down from mid to high $30.
So even better cost control expected.
Right. And they still expect to finish the year with over $150 million in cash and liquidity. They say that gives them a runway through at least the end of next year, end of 2026.
Okay, so runway through 2026. That's a significant breathing room. Any other housekeeping notes?
Just one administrative thing they mentioned. They'll be filing for an extension for their Q1 10Q filing.
Okay, good to know.
Yeah.
Now let's get to the elephant in the room. The leadership bombshell.
Yeah, this was a big one. Founder Austin Russell resigned, effective immediately. President, CEO, chairperson, all roles.
Wow. Immediately. Why?
It followed an inquiry by the board related to their code of business conduct. That's what the company stated.
A conduct issue.
Mm-hmm.
And they were clear this doesn't hit the financials.
Yes. They explicitly said it does not affect the company's financials.
That is a major development. Who's stepping in?
Paul Richie. He's been appointed the new CEO, expected to start around May 21st.
Paul Richie. Does he have relevant experience?
Oh, yeah. Tons. He was chairman and CEO of Nuance for nearly 2 decades. Deep tech background, that was highlighted as a key asset for Luminar's next phase.
Nuance. Speech recognition, AI. Interesting background. What happens to Austin Russell now?
He's staying on the board, and he'll apparently help with the CEO transition and advise on tech matters.
Okay, so not a complete severing of ties. Did they elaborate much more on the call?
No, they shut that down pretty quickly, said everything they were going to say was in the press release and the 8K filing. No more discussion on the call itself.
Understood. So a seasoned outsider takes the reins.
Yeah.
Let's pivot to product strategy then. This Halo platform they talked about, what's the story there?
Right. Halo. This is basically them consolidating everything onto one single product platform. No more separate Iris, Iris Plus, etc. Just Luminar Halo.
One platform to rule them all. Why the change?
The main goals seem to be speed and cost. Faster development, lower costs. Makes sense, right? Simplify the roadmap.
It does. Have the car companies bought in?
Apparently so. They said 4 OEMs are already signed on for Halo, and the idea is the core tech will be mostly standard, with just small customizations for each car maker.
Standardization for scale. So where will their R&D focus be now?
Heavily on the core LiDAR tech. Things like the transceiver, that's the laser, the receiver, the custom ASIC chip, and the embedded software, the really critical performance stuff.
And the less critical parts?
More outsourcing, building on what they did with their TPK partnership, let partners handle the more commodity-like components.
Okay, so focus internally on the secret sauce, outsource the rest. Is Halo development expensive?
Well, they said investment is in the middle innings, so more to come. But by stopping work on Iris and Iris Plus, they expect to offset some of those Halo costs. Resources get shifted.
Makes sense. And what's special about Halo technologically? Why would automakers choose it?
The big thing they push is the 1550 nanometer wavelength.
1550, why does that matter?
It allows them to use much more laser power safely, basically sending out way more photons than the typical 905 nanometer systems. More photons mean better detection, especially of dark objects and at longer ranges.
Ah, so better performance, particularly for safety and high-speed autonomy.
Exactly. They claim it meets the specs for most major automakers, and they have multiple development contracts for Halo already. They're expecting to deliver advanced prototypes soon, which could lead to series production deals.
And when might we see Halo on actual cars?
Timing is still looking like late 2026, maybe early 2027 for launches, though they did mention one customer actually pulled their timeline forward a bit.
Interesting. A pull forward is rare these days. So, Halo is clearly the future focus. Let's circle back quickly to those cost savings you mentioned. Sounds like they hit their targets.
They did, yeah. The restructuring from last year, April and September, achieved what they aimed for. That $115 million in annualized non-GAAP OPEX savings and the nearly $100 million in stock-based comp savings, those are realized numbers.
Realized savings. Good. And more cuts planned.
Yes. They indicated further actions are planned to get that quarterly OPEX down into the low $30 million range by year-end. Continued focus on efficiency.
Okay. And what about their debt? You mentioned they had some. How's that looking?
They've made really good progress there. They had $625 million in 2026 unsecured debt back in August last year. They've managed to cut that down significantly to just $185 million now.
Wow, that's a big reduction. Why is that so important?
Well, it puts them on a much better footing to deal with a potential springing maturity on their secured debt. Basically, it reduces the risk of that secured debt becoming due much earlier, which could have happened by June next year if the unsecured debt wasn't tackled.
Ah, okay. So managing near-term debt risk effectively. Looking ahead then, what did they guide for Q2 specifically?
For Q2, they expect revenue to dip slightly compared to Q1.
Dip again. Why?
Primarily lower sensor sales to what they call non-series production customers. Think R&D projects, smaller contracts.
Okay. And the gross loss.
Still expecting a non-GAAP gross loss between $5 and $10 million per quarter on average for the rest of the year. That scaling challenge we talked about is still ongoing.
Right. Still working towards profitable units. Any other headwinds? Tariffs? Maybe?
Yeah. They mentioned about $1 million in tariff charges hit their cost of goods sold in Q1, but they said they're close to implementing a solution with customers to mitigate that going forward. They don't expect it to be a major issue for the rest of the year.
Okay. Tariff impact hopefully neutralized soon. So pulling this all together, what's the big picture for someone tracking Luminar right now?
Well, first, the leadership change. It's sudden, it introduces uncertainty, no doubt. But bringing in Richie, an experienced tech CEO, could also be seen as a positive pivot towards perhaps stronger operational execution.
A potential positive, depending on execution.
Exactly. You'll want to watch that transition closely. Second, the shift to the single Halo platform. It's a big strategic bet on efficiency and scale. The key metric there will be converting those development deals into actual series production contracts.
Right. Talk is cheap. Production contracts are key.
You got it. Third, the financial management looks better. The cost cuts are real. The debt profile is much improved. That extends their runway, which is crucial.
Gives them time to make Halo work.
Precisely. Fourth, sticking to the full-year revenue guide is, a sign of some confidence. But they did acknowledge less buffer due to the macro environment, so keep an eye on that.
Okay. Guide maintained, but maybe less wiggle room.
And finally, the gross losses. They underscore that challenge with the current Iris sensors. The pressure is really on for Halo to deliver not just performance, but also much better margins down the line. That's the path to profitability.
A lot hinges on Halo's success, both technically and financially. All right, let's shift gears. Time for our This Is Not Financial Advice segment. Given everything we've just discussed, the numbers, Halo, and especially that CEO shakeup, got any wild but plausible trade ideas?
Okay, here's a thought experiment. We've got this sudden CEO change at Luminar, founder out, seasoned software exec in. How might the market digest this? Maybe there's a pairs trade possibility here.
A pairs trade. Intriguing. Long what, short what?
All right, consider this. Go long on a really established, maybe slightly boring traditional auto supplier, someone making essential components, but maybe not seen as a leader in autonomy tech.
Why long them?
The thinking is, the turmoil at Luminar, a key LiDAR player, might create some short-term negative sentiment around the whole LiDAR AV space. That could unfairly drag down solid, established suppliers who are less exposed to pure LiDAR risk. Maybe an overreaction creates a buying opportunity there.
Okay, long the established player, potentially oversold on sector fears. What's the short side?
Go short on, say, a highly speculative, maybe pre-revenue, pure-play competitor in the LiDAR space, one with fewer established OEM ties than Luminar, maybe a less proven tech portfolio.
And the rationale for shorting them?
With Luminar bringing in a heavy hitter like Richie, investor focus might shift towards companies perceived to have stronger leadership and a clearer path to execution, even with the recent disruption. Capital could potentially flow away from the riskier, less proven LiDAR bets towards players like the newly led Luminar, or even back towards more traditional suppliers. So short the hype, long the established.
So you're playing the potential shift in investor perception within the AV tech landscape, betting that Luminar's move could subtly benefit established players and hurt more speculative ones.
Exactly. It's a way to hedge broader LiDAR sentiment while trying to capitalize on this specific leadership catalyst at Luminar. But, purely speculative, a thought exercise based on the call. Always do your own deep research before making any moves.
Absolutely. Always do your homework. Fascinating idea, though. Okay, that wraps up our deep dive into Luminar's Q1 2025 earnings call.
Yeah, we hit the financials, the huge leadership change, and that strategic pivot to the Halo platform.
Definitely a dynamic situation over there. Lots of challenges, but also potential opportunities as this whole autonomous driving market keeps evolving.
For sure. We encourage you to take these insights, mull them over, and continue your own investigation.
And join us next time on TalkTickers for another deep dive into the numbers and narratives moving the markets.